Assalamu alaikum.
Wa alaikum salam, brother.
How are you guys? You guys doing well?
Yeah, alhamdulillah.
Let's just give others a few minutes to join if there are others joining.
Okay.
Okay, let's begin then, inshallah, for today's class. Anybody joining later can join, or even inshallah, the recording will be available like it was available last class. Okay, so with regards to last class, do you guys have any questions or anything that you want to cover before we move on to today's tutorial, or shall we just begin? Any doubts or questions that arose during the week? All right, I'll take that as a no then. Okay, so let's begin today's class. Yeah, all right. So inshallah, today's class, for today's class, we will be covering the topic 4 from your course outline. Let me share my screen and then we'll begin. Okay. All right, so you can see my screen, right?
Yes.
Can you see my screen? Okay, so today inshallah we'll be covering topic 4, which is adjustments, accruals, prepayments, and financial statements. So what we're going to do is, inshallah, first of all, I'll give you an explanation of what it is. So we'll have a quick, maybe a quick 25 minute walkthrough on what adjustments are, how accruals and prepayments work, and then we'll do a question. I was thinking we could do 2 questions, but we'll see depending on the time. We'll try to see how much we can do. And I think there was a sister who shared, I think it was Sister Saida, if I'm not wrong, who also shared a tutorial, a group exercise question that you had regarding accruals and prepayments, if I'm not wrong. And we could probably do 1 question from there, and you guys can clarify any questions that you might have. All right. So, okay, to begin with, let's just go through the what adjustments are, right? So as we went through last time, right? So there are 5 steps in the accounting process, right? Which is the first one, this is a normal accounting process, unrelated to adjustments, which is journalizing transactions, and then you post them to T accounts. Thirdly, you balance off T accounts. And fourthly, you prepare the trial balance. All of these 4 we demonstrated in the first class, using questions. And lastly, prepare the financial statement. We did not do that last class, but inshallah, this class, we will prepare a whole financial statement in terms of the statement, the SOFP, SOPL, SOCE, and SOCF. You guys know what these short forms stand for, right? SOFP, SOPL, SOC, SOCF. Is that clear? Like, do you know what these short abbreviations stand for?
Yes.
All right. Okay. So now when it comes to adjustments, let me make it bigger. Is it clear now?
Yep.
Okay. All right. So when it comes to adjustments, there are the steps are not too different. So first of all, you begin. I will demonstrate how this works exactly, but for now we'll just go to the theoretical part of it. So first of all, you begin with the unadjusted trial balance, and whatever unrecorded transactions that they have listed out in the question, you journalize them, right? Now, steps 2 and 3, I have kept this here. These are not, to be honest with you, I never do. These are just a waste of time, in my opinion. So usually when it comes to the adjustments, I don't use T accounts because it takes too long, and I don't feel it's needed. But sometimes for clarity, if you're really confused, you could use T accounts. But typically speaking, once you journalize the transactions, from that itself immediately you can basically jump to step 4, where you recognize the changes that are required and you adjust the trial balance directly, right? Most of the time speaking, you can save time by not using T accounts adjustments, but these are some of the steps that are standardized there. So if you are really struggling or you really have issues, it may be good to practice the T account with the unadjusted entries. But we'll do the question today the process is same as we did last week. But with the question we will do today, we'll avoid doing the T accounts just to show you how it works. I think it's much simpler, and the idea is to do the question in the correct way, in the fastest way possible, right? Because in the exam you don't have too much time to do. It's very beautiful to put all the T accounts and stuff like that, but sometimes that might take too much time and you might be in trouble. So steps 2 and 3, which is posting them to T accounts and balancing them off, we could do that in a direct method from the journals itself rather than creating all the T accounts. Inshallah, I'll show you how we can do that, right? So once you know the changes, so the idea of the T accounts and balancing them off is for you to understand what are the changes, right? So once you know the changes that are required, you adjust the trial balance, and then finally you prepare the financial statement, right? So this is all theoretical. Inshallah, we'll go through a question and I'll show you how it's done, inshallah. All right. Okay, and then okay, at the bottom of here we have the 4 basic adjusting entries. So generally speaking, most adjustments come under this, which is there are two adjustments that generally come under expenses, which is prepaid expenses and accrued expenses. And lastly, you have 2 adjustments based on revenues, which is unearned revenue and accrued revenue. So almost all the adjustments that you will come across will typically fall under these. There's one that is not under this, which is the revaluation of land, but that is also very simple. But that's like an outlier, to be honest. That is, it's just one thing you do. I can show you an example of that. But most adjustments come under these 4, which are prepaid expenses, accrued expenses, unearned revenue, and accrued revenue. So what are prepaid expenses? Prepaid expenses are expenses paid in advance. For example, at the beginning of the year, let's say we are in March, right? Let's say we are in March and we have paid the rent for our factory till the end of the year, and we are preparing the accounts for March 31st. So we have paid the rent until the end of the year, but so that 9-month period that is remaining, that is all prepaid expenses, right? So these are expenses paid in advance, and these are regarded as a current asset. In the nature of the account, these prepaid expenses are regarded as a current asset because you have paid for them, and now they belong to you, right? You can make use of them. It's like you're buying let's say you buy a car, and you have paid money for it, and now it's an asset for you, right? So that's a likewise thing. So in that sense, it is a current asset for the remaining of the year. That's a prepaid expense. It is treated as a current asset in your accounts. Secondly, we have accrued expenses, right? These are expenses that have not been paid. So let's say it's December 31st at the end of the year, and you have not paid your rent for the year, which is maybe 2,000 ringgit. So those are accrued expenses. Essentially, these are treated. These are almost like these are not too different to account payables. It's somewhat similar. but it's at the same time it's a bit different. Now, here it's treated as a current liability. So with increased accrued expenses, the liabilities are credited, and with decreased accrued expenses, the liabilities are debited. So accrued expenses are expenses that have not been paid yet at the time of the accounting, and these are treated as current liabilities. Then we have the next two, which are unearned revenue and accrued revenue. So unearned revenue is money received, but service has not yet been provided. So one good example of this is when it comes to the airlines, the airline ticket. So typically speaking, you buy your airline ticket in advance, right? Like let's say you're flying on the 10th of December, you have to buy it now. So from the airline's perspective, they have unearned revenue because they have received money for the service that they need to provide us, which is your flying, but they have not yet provided the service, but they have received the money. So from the airline's perspective, this is a current liability because they have received the money, but they have not provided it yet. So as of now, until they provide the service, it is treated as a current liability, this unearned revenue. And lastly, we have accrued revenue, which is service provided, but the money has not yet been received. And this is somewhat like the account receivables could come under this category, could come under accrued revenue. Account receivable is one of the forms of accrued revenue, in the sense that you have provided the service, or you have provided your goods, and you have not yet received the money. See, not all accrued revenue is account receivable. There are different types of accrued revenue. Some of them will come under account receivable, some will be as another category. But account receivable is a type of accrued revenue, just like account payable is a type of accrued expense. So an unearned revenue will be treated as current liabilities, and accrued revenue will be treated as current assets. So do you guys understand what I've gone through so far? This is just a very brief introduction. Because the question will take a long time, so I wanted to move past this as quickly as possible. Is everything clear here? Do you guys understand the basics of how this works and all the terminologies used? Is everything clear? If you have any questions or doubts regarding what I've gone through so far, please you can ask it now. Any questions? Hello. Hello.
No questions.
Okay, no question. All right. So like I mentioned during the last class, try to be a little more interactive, right? So that this is more like a tutorial. Inshallah, for the question, inshallah, I will ask you guys to answer questions here and there, so it'll be more interactive. So alhamdulillah, as you guys this is clear to everybody, let's move on to the question that was shared on the classroom. Okay. So this is the first question. All right. So this is a question called adjustment Cyprus. Do you guys have this open? You guys could probably open it in your tab as well and keep it so we can somewhat do it together in a sense, right? So the question is: the following information has been extracted from the accounts of Cyprus CNB head for the year ended 31st December 2018, and these are the expenses. So before we do anything, first of all, you have to see what is required of you. So here the what is required of you is a statement of profit and loss and a statement of changes in equity for the year ended 31st December 2018, as well as a statement of financial position at 31st December 2018 for the company Cyprus. So basically what is required of you is an SOPL, an SOCE, and a SOFP, right? And these are the journals or the transactions that were not recorded during the year. And for these transactions, you need to make adjustments, right? So let's go through them one by one, and let's solve them together, right? Okay. Okay. Wait. You guys can see both sides, right?
Yes.
Yes, sir.
All right. Okay. Okay. Let's go through this by one. So the first, there are four unrecorded transactions that we need to account for. We need to now, what are the steps again? We had to journalize them first, and then we have to do them. All right. So, okay, let's just put the journal. See, in this question, they have not asked you specifically to prepare the journal. See, there are many questions that sometimes they will say as part A, prepare the journals for each adjustment. And then they will say, maybe prepare the T account. And then they will say, prepare the statement of profit or loss. So, once you do a lot of practice, maybe there might be a time where you might not even need to journalize it. You can just do it quickly in your brain and then make the changes immediately. But, having the journals is always a good way so that, you don't get confused. And even if you make a mistake later on, you can always come back and check your work. If you do it in your head and you go forward, sometimes there might be a problem, right? Okay. So for working, we have part A. Okay. Part A is the building is depreciated at 5% on cost, and machinery and equipment are depreciated at 20% on cost. Okay. So that is part A. So the building on cost is 100,000, right? So, okay, depreciation building, how much would it be? So it would be 5% of 100,000, right? That is how much? 5,000? Guys, you can answer me. It's 5,000, right?
Yeah, 5,000.
Okay. That's the depreciation of the building. And then depreciation of the machinery and equipment, which we can take it as M&E. How much would that be? Can anybody answer? This is the machinery at cost, 125,000. How much is 20% of 125,000?
25,000.
25,000. Okay. Now, how do we make the journal for this? So for journal, like I said last time, there should be a debit and there should be a credit. So what will get debited here? So let's say, okay, let's take now. Actually, we need to separate now. Now, for the building depreciation, there will be one debit entry and one debit and credit entry. And for the machinery depreciation, there will be debit and credit. So what are the debit and credit entries? Can someone tell me?
Brother, I have a question.
Yes.
Machinery and equipment, theirs is 20%, but why it's 25,000?
So, okay. This is the machinery you have to look at the data here.
Okay, I got it. Sorry.
Okay. So it's 125,000 into 20%. Okay.
Yeah.
That is 25. I didn't check. Is that 25,000? Let me just check. Yeah, it is 25,000. Okay. So okay, the journals can for part A, can somebody tell me what is the required journal? What is debited and what is credited? Anyone know? Can anyone tell me what is debited here? What is credited? Okay, let me do. I'll do the one for the building, and somebody will do it for the machine and equipment. All right. So for the building, depreciation is an expense. So you debit depreciation. Let's make it short. Depreciation expense. Okay, which is RM, which is RM 5,000, and you credit accumulated depreciation building, accumulated depreciation building, RM 5,000. Is that clear?
Yes, bro.
Okay. Now, can someone do the debit and credit journals for the machinery depreciation?
Yeah, I can try.
Okay.
Brother, why
Let's try.
it's accumulated depreciation building?
Debit,
No, what will be
depreciation.
debited?
Depreciation expense building.
A depreciation expense, right? Depreciation expense.
And then accumulated depreciation. 25,000.
M&E. How much was it?
25,000.
25,000. And we credit
Accumulated depreciation.
accumulated depreciation, M&E, 25,000. Let's just put the values here so it's easy. Okay. Okay, so that is for transaction A. Okay. For transaction B, what is there? Unrecorded distribution cost occurred in 2018 amounting to 7. Look at the titles that are here. Okay, and now here we have distribution cost is 240,000. That already has a cost of 240,000, which has been debited, which is because it's an expense. So now what should be debited here and what should be credited? Come on, this is basic stuff, debit and crediting. Journals, we went through this last time also. So what should be debited here?
Distribution expense debit.
What should you debit?
Depreciation. Distribution expense.
Distribution costs, right? Because see, there's already a expense of distribution costs will be
Like a
debited.
cash.
And then what should be credited?
Is it cash?
No, it would be, yeah, no, because it has not been paid, right? So I mean, it would be safer to put it as credit distribution cost payable.
Oh,
So this would be a new entry, basically in the in the this would be a new entry into the trial balance. But this is the idea of this is just to balance them off. So we could potentially put cash, but they're not very clear here of whether it has been paid or whether it has not been paid. So just to be safe, we put distribution cost, payable, credit, this one. Okay. And then we have C. So we have part of the administrative expense, RM 5,000 is expense for 2019, which has been paid in advance in 2018. So what type of transaction is this? From these four types, what type of expense this is? Hello. Yeah.
Debit account payable, credit administrative expense.
No. Okay. No. First, tell me what type of adjusting entry is this? Part C.
Prepaid expense.
Yes, it's a prepaid expense. So prepaid expenses are a current asset, right? So then you would debit prepaid expense because there is no entry here that deals with prepaid expense. So we have to create a new entry of our own. So prepaid expense, we debit because this is an asset to us. We debit prepaid expense. How much? 5,000. And we credit. What do we credit? Somebody had spoken, said something before. What do we credit here? We debit prepaid expense 5,000, and we say here this is part of the administrative expense. So what should be credited? If we debit it, yes, that is an expense. So that has been reduced. So we credit 5,000. Okay, and then lastly we have D. So the last one is income tax expense for the year is 115,000, of which 100,000 has been paid during 2018 and 15,000 is yet to be paid and unrecorded at 31st December 2018. So what type of entry is that? Part D. Part D is what type of adjusting entry? Jason Najwa, are you there? Could you tell me what type of adjusting entry is part D? Okay, can anyone else answer? Does anyone know the answer?
Could you repeat the question again, bro?
What?
Could you repeat the question again? I didn't get it.
Part D. Part D is what type of adjusting entry? Is it a prepaid expense? Is it an accrued expense? Is it an unearned revenue? Is it accrued revenue? What type of entry is this one? See, that's the first thing. When it comes to adjusting entry, you have to identify what type of adjusting entry it is, and then you can build upon it. So what type of adjusting? The part C was prepaid expense. Part D is what?
Tax expense.
What?
Tax expense.
No, it's an accrued expense, right? Because
Yeah.
the expense is 115,000, only 100,000 has been paid, 15,000 has not been paid. And that is unrecorded end of this. So it is an accrued expense. The expenses that have not yet been paid is just there in the definition. So you have to, this is an accrued expense. And an accrued expense is a current liability, right? So, okay. Okay, what do we debit here?
Accrued expense.
No, we debit. So here, see,
Oh,
100,000 has
none.
been paid. So we debit income tax expense 15,000, and we credit, because the crediting is the crediting is the accrued expense. So basically, you can put, see, you can title it what you want. You can type income tax payable, or you can put accrued tax expense, or accrued tax payable. Let's put accrued tax payable to not get confused. 15,000. Is that clear?
Yeah.
Okay. All right. Okay. Now we have generalized all the unrecorded transactions, and now we have to see how it changes the trial balance. So now, instead, like I said, instead of making a T account, and that'll take a very long time, we can directly do it here. So let me show you how to do it. So you can see changes to the brought forward in the trial balance. Okay. So here, basically, I want to make the changes that will come here. I want to show it here so that it is clear to us, right? So here, depreciation expense for the building has increased by 5,000. Now there is no such entry here, so we have to create a new one in the trial balance. So we can put depreciation expense building 5,000. Okay. $5,000, and then the other one is accumulated depreciation building. What will this be? Now it is already 48,000. So what will this be? Can you even tell me what will it be? What is the adjustment here for the accumulated depreciation building?
And
It will be 48,000
yeah, we plus
plus 5,000. Correct?
53,000.
Yeah. So it will be 53,000. You get it? So basically, this will become 53,000. You understand?
Yes.
Okay. And then we have depreciation expense, M&E. This is 25,000. And then we have accumulated depreciation, M&E. This will be, how much is it? What can we put
100,000.
here? Yes, 75,000 plus 25,000. So that would be 100,000. So that 100,000. So these are the adjusting entries for A, in the trial balance, and when we are making the change in the trial balance, we can do it easily now. So we already know that accumulated depreciation building will become B50. This will have to be changed to 50,000. This we'll change it now. All right, or we'll change it later. We'll do this and then we'll change it. So we do it step by step. So over here, what needs to be changed in the brought forward balance? Can somebody tell me? This is easy now. I did the first one. This should be easy. What needs to be changed for journal B? Yeah, for the second transaction. There's already distribution costs here. So what should we put here?
247,500.
Yes, distribution costs will be 240,000 plus 7,500. So 247,500. And then here we have, there is no similar entry. So distribution cost payable, we'll have to create a new one. And this is 7,500. Okay. And then here, what should it be? What are the changes required? Yeah, what are the changes required for this one? What are the changes that will be there in the trial balance?
The prepaid expense just maintain 5,000.
How much?
5,000.
Yeah, we have to create a new entry. And then what? What is the other change?
Administration expense 175,000 plus 5,000.
No, not plus, minus. Because here, see, administration expense is an expense, right? It has been debited 175,000. Over here, it's credited. So it's minus. You get it?
Yep.
You understand? So expenses are typically debited, right? So administrative expense has already been debited 175,000, but because prepaid expense is an asset, prepaid expense was debited. It is an asset. It's a current asset, and admin expense was credited. So it is reduced from 127 to 5,000 to 170,000. Okay, that's clear, right?
Yes.
Okay, and then here we have income tax. Okay, what's the change here? What would be the change here? There's already an income tax expense over here.
We plus
100,000 plus
15,000.
Okay. Okay. All right, 115,000, and then here it will be accrued tax payable, and this would be 15,000. So did everybody understand? Did you guys understand all the steps until now? How I got the journals and how we made the changes to trial balance? Is it all clear? Is it all clear?
Can I ask?
Yes, please. If you have any questions,
just
just interrupt me. Yes.
Just now, for the administration expense, you said it has to be minus, right? But why is it income tax expense you have to plus? Do you understand my question?
Okay. All right. So yeah. So if you go here now, expenses. See, the thing is, the confusion is mainly because of this word, prepaid expense. Even though it is an expense here, it is treated as a current asset. See, prepaid expense, like we had gone through in the explanation, prepaid expense is treated as an asset. It's not like a normal. It's not a normal expense like admin expenses or tax expense. It's treated as an asset, right? So when the prepaid expense was debited because it is an asset, the admin expense reduced. So we credited admin expense. So here in the trial balance, the administrative expenses so far for the year have been recorded as 175,000. So 175,000 have been credited, and now we have credited 5,000 from it. So then if it's 175,000 debit, 5,000 credit, that means it has to be minus, right? Because they balance of each other. So it is 175,000 minus 5,000. Over here in part D, income tax expense is 100,000, and that is already debited. 100,000 is already debited. On top of that, we are debiting a further 15,000. You understand? We're not crediting 15,000 from the income tax expense. For admin expense, we credited 5,000. So that's why we minus it from 175,000. But the income tax expense was debited further 15,000. And so because it was already debited 100,000 and we further debited 15,000, so it's 100,000 plus 15,000, a total of what is a total of 115,000. Is that clear?
Yep, thank you.
Okay, all right. So yeah, so if debit and debit will plus,
Gordon?
if there's already, yeah.
Sir, can you go slowly? Because,
Yeah, yeah,
yeah. Don't speak
Yeah, no.
fast.
Okay, okay, okay. So is everything clear as of now? Do you guys you understood why the income tax was debited, why the admin expense was credited? Is it all clear?
Yeah, it's clear.
Okay.
Yes.
All right. Okay, that's great. Okay. So now I think actually here half the question is done. Once you have done this, most of the question is done really, and now it's just a matter of adding the values in the correct place. So let's do it. Let's do it over here itself, and let's make the changes. And let's make the changes here. All right. So how much should administrative expense be? It's 170. It was already 170,000. What should this be now? You can look at the changes here.
170,000.
170,000. All right. 170,000. Okay. Share capital remains the same. There's no difference, right? Because we have not made any change in the share capital. Cash also remains the same. Income tax expense, how much should it be? There's a change in it. How much did income tax expense be?
150,000.
All right, 150. Okay. Distribution cost, how much should this be?
247,500.
Okay, 247,500. Now land remains at 110,000. Building at cost, that also remains the same. Accumulated depreciation building, how much should this be?
53,000.
Okay, 53,000. Machinery and equipment at cost remains the same. Accumulated depreciation, machinery, how much should this be?
100,000.
Okay, 100,000. Retained earnings, there is no change for that. Cost of goods sold, there's no change for that. Sales of revenue, there's no change for that. Dividend inventory, no change. Okay, so are we done here with the adjusted? Have we adjusted the trial balance completely, or is there anything left to do? What do you guys think? Are we done here? Hello. What is the next step here? Are we done here?
I think the total will be changed.
No, there's something before that. Have we added all the changes to the trial balance? Because this now we want this to be the we want this to be the adjusted trial balance. Is this complete? Has the trial, okay, besides the total, have we added everything that needs to be added?
No.
I don't think so.
Yeah, so I mean the new we have, so that's the easy way of, so once you make the changes, first you go through the existing trial balance, you make the change, and then you add the new stuff. Let's add the new stuff here. The new stuff, there is, okay, let's add the new stuff. Insert below. Okay, so we have depreciation expense building, and then we have depreciation expense M&E. How much is this? 5,000, correct?
Yeah.
5,000, and this is 25,000. And then we have distribution cost payable. How much is this?
7,500.
25.
Okay, 7,500. And then we have prepaid expense. This would be 5,000. Then we have one more, right? What is remaining? What is remaining?
Accrued tax payable.
Okay, accrued tax payable, and this is credited 15,000. Okay, is everything clear? So this is okay. Now we have to of course check the total. Okay, this is wait, let me try to. So the sum of this is 1,843,500. 1 million. Let's check if this is correct. Should be. Let's just check. Okay, and then we have this one. So it's correct. Yes, 1,843,400. You guys can check the calculation if you want. I just did it on my Excel sheet. So this is so we have so this shows that we have debited and we have journalized the adjusted we have journalized the unrecorded transactions correctly. We have debited and credited correctly, and finally this is our final adjusted trial balance. Okay, is everything? Did you guys understand how we came to this stage from the unadjusted trial balance? How we generalized the unrecorded transactions and how we made the changes to the old trial balance? Is there any question? Yeah. Hello. Hello. What the? Brother.
I was exactly in the stuff.
Brother Konata.
Last one. Last one.
Hello, brother. What is happening?
Exactly. Thank you. Actually, the will be there, but the medical university for that. There'll be
Brother Konata. Can you meet it? Okay. All right. Please mute you if you guys are if you're not asking a question, mute yourself. Yeah. Anyway. All right. So Sister Mira has sent us a question. So we don't do you not have to do the T account? No, I don't think you need to do the T account. I think you can do it directly because that'll save a lot of time. But just for your peace of mind, we can do a T account for one of these. For example, let's take part B, right? So let's say the T account is, so then there will be there will be the distribution cost. Okay, distribution cost. Okay, let me. Okay. Distribution cost. I'll just do one of these as a T account and show you how it works. But the reason why I do not do this is I think it's a waste of time. It's not necessary. Doing it from once you make the journals, it's very easy to understand where the changes need to be made. Basically, T accounts the same thing, but so here, okay, so then here distribution cost. So as was shown here, you have to post them to the T accounts beginning with the unadjusted balance from the trial balance. Okay, wait. Yeah. So the unadjusted balance for distribution costs was 240,000. We have changed it here, right? So then we can say brought forward balance, okay, 240,000. And then we have over here distribution cost was debited 7,500. So distribution cost payable okay, 7,500. And so the sum amount, okay, the sum amount would be 1 minute. $247,500, and then carry forward so basically we come to the same conclusion as this. Did you understand how the T account was done?
Yeah.
All right.
Yes.
So you can do this for each. So basically the idea of doing the T accounts is for every single entry for depreciation expense, for accounting depreciation, building expense, for accumulated depreciation building expense, for each one you do a T account. So this would take a very long time. So it is not necessary at all. If you are really struggling, let's say you have maybe your lecturer gave you the whole day to do the paper, maybe for your peace of mind, maybe you can do the T account and do, but it'll get you the same thing. So basically here, this value is what goes into the adjusted trial balance. Likewise, once you do the distribution account payable T account, the carry forward value that you get once you balance off the depreciation and the crediting and the once you balance off the debit side and the credit side, the carry forward value will go into the adjusted trial balance. And so that is one thing you can do, but it take a lot of time. So for me, I never did that really, and it is too much work. It is not necessary at this stage. But if you're asked to do it, let's say sometime there could be a question where it says part A, generalize the transactions, part B, post it to the T accounts, then you can do it like this. So it's very simple. So do you guys understood how I did the T account? Yeah. Yes. Sister, you can ask me the question directly as well. You can just interrupt me and ask me the question. So if the question asks you to do it, then yes, you'll have to do it, and then you have to show it. But then likely speaking, if the question asks you to do it, they'll give you a little more time as well, because T accounts take longer time. But let's say what I would advise you, if you have a question where you have been asked to post the T accounts, I would still advise you to at the beginning do the changes directly and do the rest of the question, which is adjust the trial balance and prepare the financial statements, and then at the end do the the T account, because the T account take a lot of time. But if you think you have a lot of time and that won't be a problem, then you can do the T account. I mean, you can adjust your timing the way it's suitable to you. But if it's not asked for, and usually it's not asked for, usually they don't specifically ask you to do the T account. Usually they ask you to journalize it. That's the maximum they ask for. If they ask for it, you can do it. If not, avoiding it is the best. It's easy for you, and that you will save a lot of time. But you guys understood how I did it, right? Is that clear to everybody how I did the T account?
Yeah, it's
All
clear.
right. Okay, that's great. So I will just, I could keep this. Let me just keep this one. Okay. I'll remove this. I don't think this is necessary. Okay. Okay, one more. All right. Okay. So now that we have done the workings, so basically they ask you to show all your workings. So this is the main working that you need to show in terms of the in terms of the calculation, right? Okay, here it's better that you write something like this, like 5% into 100,000, and then here 20% into 125,000. Okay, so until now is all. I think it's all clear. Now we come to the last one. Now you've also prepared the now the journal has been done, the changes you have made it to the trial balance, and now it comes to making the statement of profit or loss, the statement of changes in equity, and finally the statement of financial position. And we'll do that now very soon. Before we go with that, one way to make it easy for you to from the trial balance to convert it into the three main statements of financial the financial statements. It would be easy for you to allocate where each of them goes. So for example, admin expenses goes into the SOPL, correct? The share capital goes into the SOCE, which is the statement of equity. So likewise, if you break it down here, then once you're transferring the data into the financial statement, it's very easy. So let's do that quickly. So the cash, that goes into which financial statement? Which financial statement would cash go into?
SOFP.
SOFP. All right. Okay. And the income tax expense, which one would that go into?
SOPL.
Okay, SOPL. Let's answer quickly, yeah? Wait. SOPL. Distribution costs, what would this go into? It's an expense.
SOPL.
SOPL. Okay. SOPL. Land would go into
SOFP.
SOFP. Okay. Building at cost would go into
Is it the building at cost? Is it asset?
what?
The building at cost, is it asset or expense?
It's an asset.
Okay, SOFP.
Okay. SOFP and accumulated depreciation also.
SOFP.
We just copy. It'll be easy to copy this. SO. SOFP. 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 What about this? Where does retained earning goes?
SOCE.
SOC, correct. Okay. Cost of goods sold. SO.
SOPL.
Where is the cost of goods sold? Yes. Sales revenue. SO.
CE.
No, sales
SOPL.
revenue goes into SOPL. Yes. Depreciation expense. SO.
SOPL.
Yeah, correct. And this also SOPL. Distribution cost. One second. Yeah, distribution cost payable goes into what?
SOFP.
Yeah, so FP, correct. And prepaid expense goes into
SOFP.
SOFP. Why doesn't it go into the SOPL?
Because the prepaid expense is current asset.
Yeah, correct. I was just asking. All right. And then accrued tax payable. Accrued tax
SOFP.
payable goes into? Correct.
SOFP.
All right. And then dividends goes into?
OCE.
Yeah, correct. and this goes into SOFP. This is also SOFP, SOFP. So now that you have these divisions done properly,
Yes.
okay. Mira, all right. Okay, so the way you know about it is now SOPL, which is the profit statement, all the expenses and the direct income goes there. So when it comes to accounting, you have your assets, you have liabilities, like your the nature of entries can be assets, liabilities, equity, or it can be expenses, income, depending on what the thing is. So administrative expenses, this is not an asset or neither is it a liability. So that means it cannot go into SOFP. It's an expense. Expenses go into SOPL. Share capital goes into the share capital goes into both SOCE as well as, like, see, this will actually I made a small mistake here. This will go into both SOCE and will also go into SOFP. It goes into both. Cash as well. Cash is not an expense. Cash is not income. Cash is just an asset that you have. So this goes into SOFP. Likewise, if you go to the each category, the expenses and the income goes into SOFP, and the expenses and the income goes into the SOPL, which is the profit and loss statement, and the assets and liabilities goes into the financial state, the SOFP, which is the statement of financial position, and anything to do with the shares, like the issuance of shares, the retained earnings. There's also something called revaluation reserve. It's not relevant in this question. That also goes into the statement of cash and equity, not cash, statement of equity, right? Do you understand how it works? Like,
Sir?
Sister Mira?
Sir, can you explain
Yeah.
what is building at cost? What does it mean by building at cost?
I'm sorry, what?
What does it mean by building at cost? I'm not really understand for building at cost.
Yeah, building at cost is that this building was bought for like when now they have not told us when the building was bought. Now according to the question, it is December 2018. Maybe they bought this building in 2010, but the cost that they bought the building for is 100,000. You get it? But the current value of the building, at December 2018, which is what our accounts will, our accounting date will be the building at cost minus the accumulated depreciation, which is 100,000 minus 53,000. If there is a revaluation, if they have revalued the land, and now if they have revalued the building and now it is worth maybe 200,000, then there's another way of accounting for that. That is actually then one of the other questions. I can just show you guys that later. But that is what building at cost means. Building at cost is the amount that the building was bought for at its purchase date. Is that clear?
Yes, so that's mean building at cost is the price when they bought, right?
Yes, but the cost of the building when they bought it. All right. Any other question before we? Sister Mira, you understood how we divided it, right? Okay. All right. So if there's any other question, please stop me. Inshallah, we'll here now we can do the statement of profit and loss, the statement of changes in equity, and the statement of financial position. Just to save us some time. Wait. Okay, let's just do it. All right. So okay, let's do the statement of financial statement of profit. So always once you have the full adjusted trial balance, the final trial balance, you start off with doing the statement of profit and loss, which is the SOPL, then the statement of equity, and then finally the statement of the statement of financial position. Okay, just give me one moment, yeah. Okay, so let me share my screen. Okay. All right. You guys can see my screen, right? Can you see my screen?
Yes.
Yes.
All right. So let's start with the SOPL. So what does the SOPL start with? What is the first thing that's done? Any SOPL statement? What
Cash
does it start with? What does every SOPL statement start with? What is the first entry?
expense.
No, revenue, sales revenue. We have sales revenue. How much is the sales revenue? It's everything is over here. You get it. Everything is over here. Over here, sales revenue is 1,158,000. But let me 1 second. Okay. Okay, so sales revenues 1,158. What comes next? What comes after sales
Cost of
revenue?
goods sold.
You guys have done this, right? Okay, cost of goods sold. So basically, COGS. That's a short form. All right, COGS, and then would be 300. So as you hire them so that you know something that makes you like done with the gross profit. And now we have the expense. So let's put admin expense. Sorry, I got disconnected. Can you hear me?
Yeah, we can hear you.
Okay. Where did I get disconnected? Do you had I done this?
At the COG.
Oh, at the COG. Sorry. Okay. All right. So once the COG is done, you minus it, you get gross profit. Okay. And then we move on to expenses. Then we have admin expenses. How much is admin expenses? Come, let's do this quickly. Can you guys reply soon? How much is admin expenses?
170,000.
Okay, 170,000. Sorry, let's do it here. 170,000. Okay. And then what is the next expense? What should come? SOPL. Okay, not yeah. Okay, income tax.
115,000.
No, Income tax should come later, right? The tax comes at the end. Okay, we have distribution costs. Distribution costs. How much is this? 247,500, correct? And then we have what do we have next? We have depreciation expense building. Depreciation expense building. How much is this? 5,000. And then we have depreciation expense M&E. How much is this?
35,000.
25,000. And then we have that's it, right? There's no other SOP on this side. So you can see exactly here, like I said, you can where is that? Okay. So what is the total expense? Let's put the total expense here. Sum the total expense 447,000. Then this would be the profit before tax equals wait, sorry. All right, so this would be the sum of that. Okay, profit before tax. What comes next? Now we have the income tax expense, correct? Income tax expense. How much is this?
150,000.
115,000. 115,000. Okay. Nothing else is there, right? From the, is there anything remaining from the trial balance that needs to go into the SOPL?
No more.
No more. Okay. Just to make sure. All right. So that means profit after tax equals so this would be profit after tax. Just let me check. I did the question before. Okay. All right. Okay. So that is the profit after tax. Did you guys got this right? How this statement of profit and loss was done? Is this clear?
Yeah. It's
Everybody?
clear.
Okay. Now we move to statement of changes in equity, which is very simple, very quick actually. So we start off. What do we start off with from the trial balance? Oh, let's make it more interactive. What do we start off with here?
Balance at
What? What did you say?
the balance.
Which balance? You mean that you have to start off with the share capital. So issuance of share capital. All right. How much is issuance of share capital? How much is the issuance of share from the trial balance? How much is the issuance of share capital?
200,000.
200,000. Okay. Okay. Now we have to calculate the retained earnings, right? So retained earnings, the way it's calculated is you take the brought forward retained earnings from the beginning of the year, which is right over here. Okay. January 1st retained, just read this period RE. January 1st retained earnings, that is 250,000. And then what you do is you plus the profit of the year. The profit of the year. So yes, that last week I had explained to you that retained earnings is whatever money that has the company has earned and the company keeps to itself, excluding the dividends. So here the profit of the year is profit for the year equals, okay, you can do this here. All right. Let me. All right. Profit for the year. And then what do? We have dividend. Okay. What do we put here?
70,000.
Do we plus it or minus it?
Minus.
Minus. All right. That's great. Okay. And then retained earnings. December 31st equals sum this amount. All right. Is that clear?
Yes.
I'm sorry. Was there a question?
It's clear.
It's clear, right? 405,500. So now we have done the segment of changes in equity. Let's just do this. So now everything else. Yeah. Now everything else is we have to go into the statement of financial position, which is land, building at cost, all of these stuff going to. Okay. So let's begin with that. So the statement of financial position, you basically you divide into assets and liabilities. Assets is divided into non-current assets and then current assets, and then liabilities is divided into non-current liabilities, and then you have the final one, which is equity, right? So basically the statement of financial position is the final demonstration of the accounting equation, which is assets equals liabilities plus equity. And at the end of this, all the assets that you have listed out will equal to the liabilities plus equity. And we'll do that and show it. All right. So here we have non-current assets. We start off with that. Okay. All right. Under non-current assets, what comes under what will come under non-current assets here? From the assets that I, yeah. Yeah. What will come under
Machinery and
non?
equipment.
No, first, okay, let's go in order. So we have cash.
Cash.
This is not current. This is the current asset, not a non-current asset. And then you have land. Land is a non-current asset. So we have this. How much is it? 110,000. Let me. Okay, 110,000. All right. And then what is the next one? The building at cost, right?
Yes.
Building. Let's make it, let's say building. All right. So then, but the building you have to calculate it. So building is 100,000. Wait, sorry. Building is 100,000. Okay. But then we have the accumulated depreciation. So this must be minus accumulated depreciation. This must be minus 53,000. Here. Shit. All right. Okay. Is this clear? How this was gotten?
Yeah, it's clear.
Better. This is more clear. costs, and then here, building. The same thing, do it here. We'll do M and E. How much is the M and E at cost? 125,000, correct? And then the depreciation is 100,000. Okay, is that clear? How we got that?
Yes.
All right, that's great. Okay. Okay. Now we have current assets. All right. What comes in the current assets first? We have cash, right? Oh wait, we have put total current assets equals sum. So 182. Cash, how much is the cash? 15,000, correct? What comes next? What is the next current asset?
Receivable.
How much?
336.
What is 336? No, let's go in order. So we have prepaid expense, right? Prepaid expense is a current asset, like I explained before. So that would be 5,000. And then what do we have? We have inventory. Inventory would be 150,000. And then we would have accounts receivable. This is 336,000. Okay, that's it, correct? Total equals sum. Okay, and then we have total assets equals this one plus this one. Is everything clear until now? You guys understood everything over there?
Sir, can you explain why we for building and machinery, why we have to minus for accumulated depreciation?
Okay. So in the statement of financial position, you need to show the current value of your asset. Now, when it comes to land, typically speaking, land does not depreciate because it just stays there. But buildings and machinery, they depreciate. If the land depreciates, then of course you have to. They will mention it, and then you can reduce it. But this is very rare the case. Usually, most questions, land never depreciates. It only will appreciate as time goes. But when it comes to building and machinery, because with wear and usage, it depreciates, right? So now we need to show the. Actually, there's a net book value. Yeah, this is actually a term that you can use. Net book value of the building. So the net book value is the current come on. Yeah, is the current value of the building and the machinery. So we need to show that in the current assets. We cannot bring the value of the asset at cost and put that as our current valuation, right? That would be inaccurate. So we have to take the amount that we paid for it minus the accumulated depreciation, and that is the current value, and that is what goes into our financial statement. So that's why you minus it. You take the billing at cost minus the accumulated depreciation from the time of buying until now, and then we get the net book value of the building. Same thing we do with machinery, and we get the net book value. Is that clear?
Yes, yes.
All right. Okay. So that's a common calculation that is always done really in the statement of financial position for any non-current asset like buildings and machinery. You always take the cost value minus the accumulated depreciation, and then you get the value that actually has to go into the statements. Okay. So now let's any other question regarding the how the assets were done?
No.
All right. Okay, that's great. Then we go to we'll go to liabilities. Um, liabilities. And equity. All right. Okay. Basically, so here, with now these are the stuff that remain. Right, all right. The stuff that remains are these these things. There is no non-current liabilities here. There's only current liabilities. If you just go through it quickly, you will realize that. Wait, so let me just this. Okay, account receivable also is done. All right. There's only current liabilities, so we'll just do that quickly. Current liabilities. So we have distribution cost payable, which is 7,500. Then we have accrued tax payable, which is 15,000. And then we have accounts payable. How much is that? How much is accounts payable?
60,000.
60,000.
Okay, 60,000. 60,000. All right, and then total. We can put total CL for total current liabilities equals sum. All right. So that is the total current liabilities. And then we have equity. All right. Under equity. All right. Under equity, we have share capital. Right. And share capital is how much? 200,000, correct? 200,000. And then we have so share, we just let me. So 1 moment. Okay. So for the equity part of the statement of financial position, we just look at our statement of changes in equity. So our share capital is 200,000. Our retained earnings is 405,500. So retained earnings December 31st is 400. How much is it? 405,500, correct? And then total equity. And then total liabilities and equity equals this value plus this value. So if you look at this here and here, they are equal. See that? That means we have, I mean, the whole question is we've done like everything balances out and we've done it correctly. You guys understood that? Any, do you have any questions on how I did the statement of financial position? Hello.
No question.
All right. So then that is clear. So I mean that is basically the majority of the class. I mean, they see there are other questions that we can do, but I think this question, everything that is needed to be covered is covered. If you look at the sister, one of the sisters last time had shared these questions. I think I have it open. Wait. Yeah. So this was shared. So in this particular question, did you guys have all of you have access to this, right? You all did this for your group exercise, this particular document. Am I correct?
Yeah, yeah.
All right. So in this one, was there anything that you found especially difficult that you might have not, that maybe was not covered today? Like in this one, see the only thing different, for example, here, like I told you, there is the company owns a piece of land which is bought in 2000. This is important because this can be this was not covered in the example that I did. In December 2019, the land is revalued to 150,000, right? So basically, how you would how you would do that, like how you would make the change for that is you would debit. So you would debit land. So you know the you have land over here. You would debit land, okay, and you would credit revaluation reserve or revaluation surplus. Both are same. Like this is revaluation reserve, revaluation. So you would debit land and you would credit revaluation reserve. And once you do that, once you do that, you add it to the changes you make. You make the way just the way we made the journals here. You make, okay, debit land, credit revaluation reserve, and then in the changes you put land over here. Okay, over here it says the land is revalued to 150,000. So before it was, where is it? Before it was 93,600. So basically, the changes, the land becomes 150,000, and the revaluation reserve is also created 150,000. Then you add that to the trial balance, and then finally you add it to the, where you add it is you add it over here in the revaluation reserve. You add it land revaluation. The land revaluation is the difference. So it was 93,000 before, and then it became 150,000. So the revaluation is how much? 56,400. So that's how you make, that is all difference from the question that I did and the questions that are here. The only difference really is in terms of the revaluation. Besides that, everything is very similar. Is there any question that you guys will have in this document here, in these questions that you want me to just quickly go over? Because we can end the class soon after that. Hello?
No questions for now.
All right. Okay. So each of you did this for a group exercise, right? Did you get the, did you do everything fine? Like was all the questions okay, and you got the right answers for it? Do you get your results back for the group exercise, or is it still unmarked?
Mine is still unmarked.
All right. Okay. Anyway, so I mean, if you guys want, you can do it yourself, and if you have any question, you can ask me. I don't see the need of going through the whole thing again. Going through one. The thing is, one question itself is it's quite tedious. It takes a long time while explaining. So if there's anything specific here that you guys are not clear about, just ask me, and I will do it. Like if there's one entry here that you do not know how to debit and how to credit, where to debit, and all that. It'll okay. Let's just take one of this for example, right? This was an interesting one that I was just looking at. So okay, this one, part C, the note payable was issued on August 1st, 2019. So just make sure, remember that the year ended 31st December, right? So note payable was issued on August 1st, 2019 with 4% interest. Interest on the note is accrued at the end. So this is the note, 12-month note, 36,000. 36,000 is payable. what do you debit here? What do you credit? Can anyone answer this one? The part C. You guys did it, right? Hello. Can anyone answer it? What do you debit and what do you credit for part C? How would you do this one?
Debit, not payable.
No. First of all, you need to find out. First of all, you need to find out what is accrued and what is like how much is the interest and how much is accrued and how much is not, right? So yeah, okay. So here the note payable is 4% interest, right? So you take first of all you take 36,000, okay? 36,000 into what is 4% of 36,000? It is 1,440. However, the interest the interest that is relevant to this year is a 5-month period. So you take, so it's August, September, October, November, December. So you take 36,000 into 4% into 5/12, correct? That is 600. So 600 ringgit worth of expenses have been accrued at year end. So like what we went is accrued expenses. Accrued expenses is a current liability. So what you would do is, this was an accrued expense. So basically you have accrued income, accrued interest payable is expensed, okay, is credited, all right, and you will, in terms of interest expense would typically come under other operating expense. So you can debit other operating expense by 600 and you can credit accrued interest payable. Was that clear? You understood how I did that? Was it understood?
Yes.
Yeah. All right. So that is, I mean, so that's the way you do it. It is not very difficult. You just need to have more practice. And in any case, once you have if you have any questions, any doubts, please ask. And inshallah, the recording for this also will be available. I'll upload it if you want to recheck on anything or go over anything. You can do so. And I think, yeah, if there's no other questions, we can end the class with this. Are there any other questions that you guys have? Because look, I don't intend to do another class on adjustments and accruals, right? But if there are further questions that you want me to do, or further doubts that you may have, I can do another class. But it depends on you guys and what you need. So as of now, with regards to the course outline, we've covered the double entry, which is topic 3, and we've covered topic 4, adjustments, accruals, prepayment, and this one we did completely. We did everything. So if there's any doubts and questions that you have, please ask, and inshallah we'll cover it. If not, we can move on to the next topic, inshallah. All right. Any questions before we end the class?
No, brother.
No.
All right. Okay, then inshallah. Jazakallah khairan for coming. I'll upload the recording, inshallah. Subhanakallahumma bihamdik, ashhadu an la ilaha illa anta, astaghfiruka wa atubu ilayk. Assalamu alaikum.
Thank you, sir.
Welcome, brother.
Thank
Thank
you.
you. Thank you.